second full year as a publicly listed company, and now approaching our 7th year in operation in Australia. But for FY17, we finished revenue at 326.7 million. It's up 29%, with underlying EBITDA at $43.5 million, up from 35.4 million in the previous year. That's 23%. Very much underpinned by strong mobile subscriber growth. As you can see here, 1.074 million closing subscribers, up from 966,000 in FY16, and it was about 718,000 subscribers when we listed 2 years ago. So despite the competitive market within the Australian market, we've been growing very strongly as a result. Obviously, final dividend of 5.1 cents, which is fully franked, and a total dividend per share of 9.1 cents. If I just touch on looking at the trajectory of growth since we launched in over 6 years ago, you can see from our subscribers, gross profit and EBITDA, we are consistently growing year in, year out. As I mentioned, 1.074 million subscribers, up from 718,000 when we listed in July 2015. If you look at underlying EBITDA, in 2 short years, we've obviously grown EBITDA just shy of 200%. So it's it's been really strong growth, and it's really our business, which is a scalable tech platform, through our customers managing themselves through our online DIY platform, means over 90% of the gross profit falls to the bottom line. So as we get scale and more customers, we continue to grow in that respect. Gross margin is one of our success stories as well. Despite, and it's really underpinned by, I guess, the way it's our pricing strategies, but also underpinned by our strong relationship with Optus. Despite having always been in market competitively on pricing, we've managed to sustain a consistent EBITDA growth. As I highlight here, the 30% EBITDA growth here is the total group, including Click Energy. But when you look at the mobile only, it's 32% consistently. Within those numbers as well, we closed the acquisition of Click Energy in May, on the 1st of May, and we've got 60 days of trading performance with Click Energy. And in our 43.5 million EBITDA, 3.1 million EBITDA was contributed by Click Energy in 60 days. It was a fantastic result, and that was really as they closed over 165,000 household accounts for the year. It's been growing customers' revenue EBITDA approximately 25% year in, year out, and the outlook for energy remains strong, particularly, as you know, in the market where pricing activity is becoming a focal point in the media. It's a really good opportunity to disrupt and gain continued growth. If I go to the next slide, really this is focusing on our strategic priorities. Really, what Amaysim is about, it's about really providing, what we want to do is increase our share of the household wallet by really simplifying the household's life around utilities and telco services. So we've obviously been successful in mobile. We launched our NBN in May this calendar year. We completed the acquisition of Click, which means we have an offering of electricity and gas. And we've been piloting our online devices store through our sub-brand Vaya. And what I can tell you today is that we will be integrating the Click Energy business into our business and offering Amaysim Energy into our technology stack before Christmas, and we'll be launching Amaysim devices before Christmas as well. So what it means is that you will be able to, from the palm of your hand, be able to order services, manage your accounts, and it's really providing what our brand platform describes as amazingly simple services to allow customers to get on with everyday life. And it's through convenience and simplicity that will drive that cross-sell. In terms of the opportunity there, really comes back to the cross-sell opportunity that exists. We've got over 600,000 households in Amaysim. With the acquisition of Click, we've got that brings us up to over 800,000 households that we have access to. Our 3-year aspiration is to cross-sell into 300,000 households, and we have a target of $200 ARPU per household. So it could be, that $200 could be made up of a different mix of customers, whether they take multiple mobiles and an NBN, or gas, NBN and a mobile. But we've set a goal of around $200 ARPU per household, and 300,000 households coming off 800,000 existing accounts and growing. So over the next 3 years, that 800,000 household account will grow organically, and then we assume we could get somewhere around 30 to 40% penetration into the household. So I think just to summarise, it's been an exceptional year for 2017. Strong performance again. It's really probably important to understand we're not a telco. We're a tech company that provides a best-in-class customer experience platform and allows customers through automation and a DIY concept to be able to look after themselves. I think when I came here last time, the analogy is we're the Spotify or the Netflix of the utility and telco services. As I mentioned, clear strategy to drive increased share of the household wallet through our mobile-first approach to online services. We have a very strong relationship with Optus, which really underpins the mobile business. You can see, obviously, the mobile market is very competitive, but we always maintain our competitive price position and consistent gross margin. We've demonstrated that year in, year out. And I would like to close by just saying each one of our verticals is positioned for strong growth, and each vertical in its own right has structural growth ahead. And we look forward to continuing the trend in FY18. Thank you very much.